What's up, crypto fam, and welcome back to Bitcoin Bulletin. Get ready for a rapid-fire update that you absolutely cannot afford to miss. We're kicking things off with a bombshell. It turns out that in 2025, it's not just gold that's shining brighter than Bitcoin. We're talking about silver, platinum, and even palladium. These precious metals are absolutely stealing the spotlight and outperforming BTC in a major way. We've got the shocking performance figures that show just how much they're leaving Bitcoin in the dust. But the narrative around Bitcoin itself is also undergoing a massive transformation. Our next story dives deep into new research revealing a huge shift in perception. A significant majority now see Bitcoin not as peer-to-peer cash, but as digital gold. We'll explore what this evolution means for its role as a store of value and how it impacts its future potential. Then, get this. Saylor and his company Strategy are doubling down, buying another massive Bitcoin dip. We'll break down their latest $100 million purchase and reveal how this institutional confidence is mirroring a surge of interest in a brand new token called Bitcoin Hyper, which is making waves in its presale. Could this be the next big thing? And finally, a deep rift is forming within the Bitcoin community itself over the upcoming Bitcoin Core V30 update. Prominent developer Dashjr is making some incredibly serious claims that could divide the entire network. We'll unpack this heated debate and what it could mean for the future of Bitcoin. You do not want to miss this. Make sure you're subscribed and have that bell turned on so you never miss an update. Forget gold, it's got nothing on silver. For years, Bitcoin has been hailed as the new digital gold, a safe haven and inflation hedge. But in 2025, the precious metals market is staging a dramatic comeback, and they're not just outshining gold, they're leaving Bitcoin in the dust. We're talking about silver, platinum, and palladium posting staggering gains that Bitcoin can only dream of. Gold itself has seen a remarkable 44% surge, hitting new record highs. But silver has jumped an incredible 53%, platinum an astounding 60%, and palladium a solid 33%. Meanwhile, Bitcoin, the so-called digital gold, has only managed a modest 20% gain. The numbers don't lie. In this current climate of economic uncertainty, rising inflation threats, and geopolitical instability, investors are flocking back to the tangible security of traditional precious metals. What's fueling this rally? A major factor is the aggressive diversification by central banks worldwide. After the shocks of the coronavirus crisis and the invasion of Ukraine, these institutions have been loading up on gold at a record pace, adding over 1,000 metric tons annually. This massive demand from central banks provides a powerful tailwind for gold and its counterparts, a luxury Bitcoin, which doesn't yet feature on most central bank balance sheets, simply doesn't have. Furthermore, ongoing liquidations from old Bitcoin wallets above $110,000 are reportedly offsetting the inflows from ETFs, capping BTC's potential gains. This performance shift is a wake-up call for anyone who thought Bitcoin had permanently claimed the digital gold crown. It highlights that in times of real economic stress, the allure of physical, time-tested assets remains incredibly strong, forcing us to reevaluate where true value is currently being stored. But is Bitcoin truly losing its luster? Or is its narrative simply evolving? We're about to explore the dramatic shift in how the world views Bitcoin, moving from peer-to-peer cash to something entirely different. From cash to gold, Bitcoin's identity crisis. Bitcoin was born with a revolutionary vision: to be a decentralized, peer-to-peer electronic cash system, free from the control of banks and governments. But fast forward to 2025, and a new survey from CoinGecko reveals a dramatic shift in how the crypto community itself perceives its flagship asset. The research, surveying thousands of crypto participants, shows a striking divergence from Bitcoin's original ethos. A mere 14.9% of respondents still believe in its primary role as a system for everyday transactions. Instead, a massive 58.1% now embrace Bitcoin as digital gold, a scarce store of value designed to protect wealth against economic turmoil. This shift is understandable, given Bitcoin's impressive price trajectory and its perceived resilience during inflationary periods. This evolution isn't without reason. The proliferation of faster, more specialized payment networks on other blockchains has diminished Bitcoin's utility as a day-to-day currency. Its core design, prioritizing security and immutability over speed, has inadvertently solidified its appeal as a long-term investment and hedge. This digital gold narrative is particularly compelling for long-term investors, who see it as a hedge against the inherent frailties of fiat currencies that have historically lost significant purchasing power due to government policies like quantitative easing and unchecked money printing. While the precise definition of Bitcoin might be debated, its tangible outcomes are undeniable. In regions struggling with hyperinflation or strict capital controls, Bitcoin offers a vital lifeline, providing access to digital finance for the unbanked and a means to preserve wealth. Its fixed supply, unlike the arbitrary issuance of fiat, offers a level of predictability and discipline that is increasingly attractive in a world awash with printed money. Even a small allocation to Bitcoin within a diversified portfolio has historically shown the potential to boost returns while mitigating drawdowns, demonstrating its unique role alongside traditional assets. But as Bitcoin's narrative shifts, some are doubling down on its core value proposition, even as the market dips. Get ready to see how Saylor's strategy is buying the Bitcoin dip again, and what it means for a hot new token, Bitcoin Hyper. Saylor buys the dip, retail follows, Bitcoin Hyper surges. In a bold move that signals unwavering confidence in Bitcoin, Saylor's strategy has once again opened its wallet, purchasing another $100 million worth of Bitcoin amid a market downturn. This latest acquisition of 850 BTC at an average price of $117,000 per coin adds to Strategy's already massive holdings, which now exceeds $72 billion. This isn't just a one-off. Strategy has a history of dollar cost averaging into Bitcoin, even during market lulls, demonstrating a long-term conviction that the cryptocurrency will inevitably recover and climb higher. Strategy's approach contrasts with the caution seen among some retail investors who are spooked by Bitcoin's recent volatility following its all-time high. While Strategy's stock, MSDR, has seen a slight decline, Bitcoin itself has shown more resilience, with a smaller loss over the past month. This institutional buy-the-dip mentality, exemplified by Saylor, suggests that major players view current price drops as prime opportunities to accumulate more BTC at a discount. Interestingly, this institutional confidence is spilling over into the broader crypto ecosystem, particularly towards new and innovative projects. A prime example is Bitcoin Hyper, a new token that's rapidly gaining traction in its presale phase. Bitcoin Hyper aims to revolutionize the Bitcoin network by introducing a Layer 2 solution that integrates the Solana Virtual Machine, SVM. This integration promises to dramatically improve Bitcoin's scalability, reduce transaction fees, and unlock smart contract capabilities, enabling a wide range of decentralized applications, DApps, like crypto swaps and NFT trading directly on the Bitcoin network. The presale for Hyper has already raised over $17.7 million, attracting significant attention from whales, large investors making substantial purchases, some exceeding $160,000. This enthusiasm for Bitcoin Hyper suggests that while investors like Saylor are accumulating core Bitcoin as a store of value, there's also significant appetite for projects that aim to enhance Bitcoin's functionality and expand its use cases within the Web3 world. But not everyone in the Bitcoin space is singing the same tune. A major update is causing serious controversy. Get ready for a deep dive into the shocking split within the Bitcoin community over the upcoming V30 update and what it could mean for the future of Bitcoin. Bitcoin community divided. Is Core V30 a threat? The upcoming Bitcoin Core V30 update, scheduled for release in October 2025, has ignited a fierce debate and split the Bitcoin community into opposing factions. At the heart of the controversy is a stark disagreement between prominent developers Dashjr and Jimmy Song regarding the potential implications of running the new software. Dashjr, known for his work on Bitcoin knots, has issued a grave warning. Running Bitcoin Core V30, he claims, is an endorsement of child sexual abuse material, CSAM. Dashjr argues that the software not only verifies but actively supports, stores, and distributes such content, requiring no special tools beyond a standard browser or image viewer. He believes that widespread adoption of Core v30 could lead to the immediate demise of Bitcoin, likening it to an existential threat due to its potential to host and distribute illicit data. Jimmy Song, a vocal proponent of the Core v30 upgrade, strongly disagrees. Song contends that while bad actors might attempt to leverage the network for malicious purposes, node runners are not liable. He emphasizes that Bitcoin Core v30 does not inherently display images or videos, and therefore, merely verifying transactions does not equate to aiding or abetting illegal activities. Song dismisses Dashjr's concerns as exaggerated FUD, fear, uncertainty, and doubt, asserting that the network's verification process is separate from the content itself. This debate taps into long-standing concerns within the community about the Bitcoin blockchain's capacity to store data beyond financial transactions, including potentially harmful content. While Bitcoin Core has historically strived to minimize legal risks, Dashjr's assertion that v30 could open the door to explicit content has sent ripples of anxiety through the community. Opinions are divided, with some accusing opponents of using CSAM as a scare tactic, while others urge caution, emphasizing the immutable and permanent nature of blockchain data. The outcome of this ideological clash could significantly impact the future direction and adoption of Bitcoin Core. And that's a wrap on today's top stories. Don't go anywhere, we've got a lightning round recap and a full call to action coming up right after this. Wow, what a rundown! In case you missed it, precious metals are making a serious comeback, outperforming Bitcoin in 2025. The narrative around Bitcoin is shifting dramatically, with most now seeing it as digital gold, not just peer-to-peer cash. Saylor's strategy is buying the dip again, fueling excitement for new projects like Bitcoin Hyper. And a major split has erupted in the Bitcoin community over the v30 update, raising serious questions for the future. Don't forget to hit that like button, subscribe to Bitcoin Bulletin for all your crypto news, ring that notification bell so you never miss an update, and let us know your thoughts in the comments below. Follow us on all social platforms for more insights. We'll see you next time.